is Kim Crumpus from the Price Action Traders Institute, and it's Friday, October 25th. The month of October is almost over, and I realized I haven't sent any videos on the market during most of this month. In fact, it may be the entire month. It's time to send you a video and talk about some of the great things that have been going on in this market during the month. We've had some really good moves. We've had some expanded price action, which we haven't been seeing for over a year. So it was great to see the fall trading, which kicked off last month, really start to show us some great big moves that we could sink our teeth into. So I want to talk about particularly yesterday, Thursday, the 24th, and talk about the pound, and in particular, the pound yen. So let's go ahead and first talk about the risk disclosure. If you've never traded before, trading is really risky. And if you have traded, you'll know trading is really risky. Everyone's results can differ, and a lot of it has to do with their psychological makeup, or with your psychological makeup and your level of experience. So someone who's been trading for 1 month, don't expect yourself to be able to trade at the level that someone like myself, who's been trading for almost, I want to say 18 years now. All right. So there's just no way. It takes a lot of time, and it takes following a super good, solid, proven method. So everyone's level of success is different. But at the Price Action Traders Institute, I have a super simple, not easy, but super simple way to day trade the Forex market. Let's go into yesterday's trade. All right, here is the pound yen that you're looking at. And yesterday, before the New York session, before the New York trade planning session began, we had an interest rate announcement out of Europe, the main refinancing rate. And that rate comes out at 4:45, an ungodly hour here on the West Coast, 7:45 Eastern. So I was up looking at the market and stalking the pound pairs, because the pound pairs were in this thing that we call a clear directional move. I was able to get into a trade right in here on this pullback right in here, and I was looking to go short this pair. And like all of our trades, we have very specific stop losses. And on this trade, on a pound yen trade, which is our widest stop, is a 12 pip stop. This trade started to move down, but never really got any legs on it. And right before I began the New York trade planning session on the 5:45 a.m. candle, this trade was stopped out for 12 pips. All right, so I'll show you what that looked like on a chart. And then after the trade planning session, I was able to get back into the market short, using our re-entry rules that everybody learns how to use, and I'll show you some of the screenshots from that trade, and then actually take this trade down. This trade, from the point of re-entry, moved about, let's see, I got in at 140 even, so it moved about 113 pips, all right, from high to low. Now, I didn't get all 113, and there's a reason why, which I'll walk you through, but let's go ahead and take a look at the sequence and how this trade developed. As I just mentioned, I got back in this trade right here at 140. RE stands for re-entry. Here's the other trade that I had been in, and again, that was a loss once this big spike happened here. So again, I re-entered this trade selling it at 140. Let's take a look at the next move down. All right, so now price has moved off this 140 area nicely and has come through our first target. Notice these targets here, 139.80, 139.50, 139.20. These targets are placed on our charts once we open a trade. They're removed, obviously, once we close a trade, but they give us a roadmap as to where our potential take profit levels should be as a patty trader. All right. And price was on a move. I was looking at the other pound pairs at the same time. And so I moved and pulled my stop to lock in 20 pips here, so that if price swung around and got me, it would take me out and I would have 20 pips, enough to offset that earlier loss I took. Now, I put in a take profit way down here. You can see at 139.20. If price were to move off this 140 entry down there to 139.20, that would be an 80 pip move. All right, let's see what happened next. Price continues to push, and it's pushing towards this 139.50. So I want to now take that protective stop that I had at this level at 139.80, and I want to pull it down to lock in some more. As price moves and I'm getting some good movement across the board, I want to make sure that I protect this position. So price started to stall right in here, and it got a little bit bumpy, but again, I was okay. I had a profit locked for plus 30 just in case the market pulled back. And once the market started to take off on this next candle and push through 139.50, our second take profit level, I pulled this down, this protective stop, to make sure that I would lock in 40 pips if the market whipped around. And I still kept the target down here at 139.20. And I put a question mark here at the time because I thought, is it going to get down here? That's the $1 million question, right? And here's a look back. Once price got through 139.50, it started to bounce. It started to suck back. And this is the area where traders start to tell themselves stories, especially if they've been around for a while. If they're new, you would have probably taken this. This would have been a 50 pip trade. This would have been a beautiful trade for a newer person. All right. So I pulled the stop once price started to take off on this candle right here and break this low over here that it had been stuck at for about 45 minutes. I pulled it down, this trade, this protective stop, to now lock in 50 pips. And again, I was still targeting down here at 139.20. So now I want to show you what happened, how this trade actually played out, because it did not come down to my 139.20, which was right here. You should be able to see this little blue, mark here. Let's go ahead and lock that in, which is right here, okay? And it came close, but as price started to pull back, I jumped out of this trade. But let's just talk about this. So again, this first trade, this pullback entry, I lost 12 pips on. And then using the re-entry rules at Patty, I got back in here at 140 even. 140 even. And I sold it. And price, as you saw on those prior screenshots, as price started to continue to move, I locked profits in. And at this point right here, I had moved my stop again, which I didn't screenshot, down to 65 pips. So I had a total of 65 pips locked into this trade. The last lock you saw was at 50. And then price came down and I jumped out, for plus 78. So price came within this 139.20 that I was targeting, but I thought, you know what, it was starting to get late. It's good enough. I haven't had a 78 pip trade in a while. And that's the other thing. You know, if you can't even get a 20 pip trade, then you should book trades that get you 20 or 22 or 25 pips. And if you get 20 pip trades, but you can't get 30 pip trades, and you get something that moves to the next level and it's 30 pips, you should book it at that. All right. So again, I lost 12 on this first trade, minus 12. I used the re-entry rules to get back in, and I booked 78 pips. And that left me with what? Plus 66 on the GJ alone. And this, using a risk of 12, is 5.5 times. So on one trade, I was risking 1 and I made 5.5 times in just a matter of a couple of hours. Let's actually measure it out. So right here down, there's what? 7 candles. So less than 2 hours. 5.5 to 1. That is a beautiful trade. All right. And I did something very similar on the pound dollar, only I lost twice on the pound dollar and then did a third re-entry and recovered everything that I lost and actually made some. But that's for another video. All right. So I hope this helps you. But the thing I want you to take away from this is you have to trade with a plan, and the plan has to have strategies that are simple, Simple enough for you to remember and simple enough for you to execute on the fly in the heat of the moment, especially after you take a loss. All right? I hope you have a great weekend. If you have any questions, please contact me at support@Price Action Traders Institute, and someone will get back to you. And I invite you to join our membership. You can join us now at priceactiontradersinstitute.com. And also, leave me any kind of comment you want about this video. All right? Thanks for listening. I know you have valuable time and you could be doing other things than listening to this. All right? Thanks, everyone.